Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's April 29th. This will be our chart lesson for today, and this is going to wrap up our week. No chart lessons on Friday, so we won't be back again to do it till Monday. Interesting day today. Looked like we were going to just have a complete sell-off, and before the day was over, we closed up considerably. Let me explain to you what was going on here. I think that there's actually a gap on the daily chart. You won't see it on this chart, so this is going to confuse a lot of you that don't understand the difference between a daily chart and a 24-hour chart. But if you don't get it, don't worry too much about it. But listen, and maybe you'll either learn something or maybe you can understand here if you didn't already understand this. But prices closed right here yesterday, and that's where the daily session would close as well, right there, where this red line comes right across here. That's the close from yesterday, this red line. That's why I have it on this chart. And we opened up here at 8:30. This yellow line is where the regular daily chart of the 8:30 a.m. Central Standard Time market opens. So you don't have all this trading on the daily chart. You just closed here and you opened here. So that there is a gap between here and the highs from here's the highs from yesterday. So there's a gap between where it opened today and where the high point yesterday. And daily charts don't, no charts like gaps on them. They generally fill those gaps pretty quickly. And so it was no surprise that prices traded down to fill that gap. And that gap was right across here, right there. So when prices traded down to right here, they filled that gap. And a lot of times they'll go on down and fill the gap from the close as well. They'll go ahead and go trade. If they continue trading, your next target should be where the close was from the previous day. And notice they went to the tick almost before they bounced. And notice too that we have this challenge. You had to get this overshoot here to get down there, but it still got down there. And generally an overshoot leads to a break. And guess what? You got a break when it came back to the other side. Then a strong move to a new low, and then prices reversed. And if you're a member of our premium set membership, and you can see our morning chart, you can see I described this exact same thing at 9:30 this morning. It was actually before 9:30 would happen, and it's so predictable that it's people go, how'd you know that? Well, it's because I've seen it do this over and over and over, and it's predictable. Prices will fill those gaps. I mean, we could have corrected a little bit, went sideways and took off and made another leg up. That does happen, but most of the time, prices are going to first fill the gap between the close, between the open today and the high yesterday, which is here. And then if they continue lower, they're going to trade down to the close, which is right where it bounced. And then they're going to start testing the previous lows, which was down here. And we actually went a little bit further. We actually tested the close from the previous day. So if you look, there's the low. We didn't go much. That pretty much was the target, but we actually tested the lows here from the previous day. You can see from that line to that line, that was the previous lows from the previous day. And that's exactly where we went to, almost to the tick. We didn't quite get that one. So we actually tested the close, got to the closes there, but we couldn't get any further. And then this thing rocketed out of here, rocketed out. So almost textbook price action the way we teach it, the way I described it before it ever happened. And it's not because I'm some prophet or somebody that knows anything special. I've just, through experience, I know that what prices do, and that's why you get better at this as you get more time and screen time and practice and experience. This is a skill, and like any skill, you get better by immersing yourself in it, watching it every day, studying it every day, and practicing it every day. If you're a piano player, you don't get better by sitting there looking at the piano and watching somebody else play. You get better by getting on there and playing and practicing every day. And it's the same thing with trading. You got to trade every day, and trading's only the beginning. The real work starts at the end of the trading day when you open your chart and you go back and you chart and you study all your trades. Study all your trades first. Figure out what you did right, figure out what you did wrong. Then when you're done with that, go back and look. See where all the big moves. Notice that big move started right there. Notice this big move up where it started. It started off the low of the trend channel. But look where the next big move came from. Back over here at the key entry point. You got a break, but it still led to a big sell-off. And then look where the big moves came on the reversal. Key entry point, key entry point, key entry point. That's where all the big moves happen. So study your charts and learn and figure out those things. Figure out where they're happening at. And then learn how to find it in real time. You got to learn to see it after the fact first. And people will come on here and post stuff on YouTube and say, well, anybody could point out those trades after the fact. Yeah, they probably could. But could they explain why and show you how to find them in real time? That's the difference between what I'm trying to show you and what we're actually doing here. People that don't understand just think you're coming on here and marking trades and say anybody could show you where the trades are. But can they explain why and how you could find a way to enter those? That's the key. And this is repeatable over and over and over every single day. Some days are harder than other days. This was an easy day. Unfortunately, as strong as this sell-off was, there was not a lot of opportunity to get into it. It's a shame that there weren't more trade opportunities than there were. However, there's still some really good ones here too. So, but there's just not a lot of. I didn't get a lot of good setups with good signal bars. So it happens sometimes, but there's still plenty of trades here, more than usual. So anyway, we spent almost 7 minutes here. Let's get to the trade. So this thing's not an hour long, but I'm going to back out, or zoom in as I should say. I feel like I'm backing out here, but I'm actually zooming in. So a lot of times you'll hear me say, let me back out. And if you're thinking, is Matt crazy? Yeah, maybe I am, but it feels like I'm backing out. But let me zoom in here. Okay. Early on, we had a spike in channel here. Prices spiked up and went into this channel. That's a clear channel. Anybody should be able to see that. You finally get a close outside. Maybe not convincing, but you still get two legs up, and then you get a very convincing close outside here, and then a move up, and then we reverse. Perfect price action. So anyway, notice we're trading up here. 7 o'clock came right as we're kind of making this low and trying to move back up here. And notice what happens. You make a new low, and we're trending up rather strongly. This was a big spike in channel here. Maybe there's a close outside. So you got to be a little careful here, because you could make a new low in reverse, or a new high in reverse rather, because once you see the close outside, or the convincing, really what we mean by a break is a convincing close outside that trend line. That's not 100% convincing, because I could adjust this a little and tell myself, that's still good right there. So let's assume that's really it right there, and there's not a convincing close. Either way, it's the same trade, because it's so close. But watch what happens. You're kind of going sideways here, but this is a strong trend, and strong trends will do that. They'll go sideways rather than correct a whole lot, because there's too much buying from them to get a big correction. So we pull back to that key entry point. You move up, you get a first entry, you move through the resistance, you get a second entry short, and it fails. So, and notice how it closes above that support, or above that resistance line. It kind of acts as support. That's a failed second entry short that's probably going to trap people. So you may go long right there. What I would recommend on this is let this break higher and drop a limit order, maybe a tick or so back, rather than entering with a stop one tick above. Just to give yourself a little more leeway, and maybe you take that trade. I like that trade because it acts as a trap, and it's probably going to give you at least a scalp. I really thought prices would take off. Didn't, but you still get a scalp out of it. It's a little aggressive. So you always got to be careful going long into resistance like that. So because this is what happens, it doesn't go far and it comes back, and then it gives you a better chance here. Now if you're just patient, a few minutes later you get a second entry long, perfect signal bar, plenty of room to get out and look at it go, boom, it takes off. The smart traders are going to wait to here. Some of your aggressive ones may enter here. And probably the only thing that saves them right here is this is a trap, and your top pickers are all trying to go short here. Then they get stopped out, and then it turns back down, and they all jump back on again, and then they get stopped out again. Never try to pick tops. Somebody actually sent me their chart today, and they bought this thing all the way down. And the trader explained that the reason they did that was they got a bias of long, but of a short. Actually, I'm trying to remember. They actually bought an option yesterday. I think they said they bought a put option. And so when they got up this morning and everything was trending up, they sold it because they thought they were wrong. So he probably lost money on his put when he would have made money, but that gave him a long bias, and he tried to buy this. He tried to buy this thing all the way down, and believe it or not, he still made, I think, $10 or something. I can't remember what he said. He still made money. He got like three. He had something like 3 out of 5, 3 losers out of 5 or something like that. But he realized his mistake that he was buying all the way down. And if he'd have been selling, he'd probably made a killing today. But anyway, never think you know what prices are going to do. Go by what they're telling you. They show you here all day long. Like I said, I had a good idea what prices were going to do at 9:30 this morning. I spelled it out. And if you are a premium member and you didn't read it, go read it because it's there. It was in advance, and you can go see that I spelled this whole thing out almost perfectly. And it's not, and again, it's not because I've got any magical powers or because I'm got ESP or because I'm some fantastic guru trader or anything like that. It's just because I know what prices do. I see them do it every day, and they do the same thing consistently over and over and over. And once you learn it, all you got to do, if you got any memory at all, if your brain works and you can remember things, you remember, hey, this is what prices do when they gap open. So it's not that hard. The hard part is just timing your entry, because we're timing our entry on a razor thin margin. We can't afford to be very much wrong. If our timing's off, we got to take a hit and look for another one. But that's just the way it is and what we're doing. But anyway, you get the second entry long right here. Notice the new high, pull back. When it breaks high right there, that's a first entry. Moves on down. So when it breaks high right there, that's a second entry long. You can clearly see there's 2 moves. That's 2 legs down. That's all second entries are doing, are looking for 2 legs of correction, and then the trend starts back. And boom, that's probably the trade of the morning right there. Quick, easy trade, and you might be done. You might get your target and be done right there by itself. And then we got the new high. We come back. We make a lower low. That's not a good sign. Look how we came through the EMA. We're probably going to roll over here or go sideways or something. So be careful. You get a first entry there. You pull it on back, and you get a second entry there. Too congestive. Horrible signal bar. Doesn't qualify. And you see we just kind of chop along. And finally, you break lower, and you get a new low right there. I actually moved this down later in the day to right there. Earlier I was using these closes across here, but as it closed lower, I dropped it on down. You can see it's fitting nicely at the top by doing that. So finally you get a lower low and a higher high. This one is tempting, and you could look at that as a triple test and a great signal bar. And if you entered there, it's okay. But because we went a little lower and because we've already got that strong leg down, there's a very good chance we're going to get another leg down soon. So I'd wait on a higher low, which comes right there. Again, your signal bar qualifies, go long, and you can see the smart traders waited. They all scalp out, and it turns right back down again. I like going short here because it's right back at the high of the range, and it's also a second entry short. It gives you plenty of room to get out. We've been going back and forth, and you kind of got a short bias now because you got this leg down. You're probably going to get another one. Enter there, and you got another huge move. So if you just bought this one and sold that one, that's all you need today. If you sold this one, you get a runner on this. This one was probably hard to get into, I'll be honest. You probably would have had to use a limit order, and you may not have got filled because it just gapped right. Notice how there's no overlap. So you didn't have much time there. And I don't know if it would have come back and filled you or not, especially if you tried to be conservative, you would have got left behind. So that one is kind of hard to catch. There's a lower high here. And you are looking for a measured move. I didn't mark this one, but it's a possibility. Notice how it pushes below the support, pulls back and tests it and takes off. I'd like to see at least 2 tests of that. You could argue for that one to be green, but I'd probably wait. Comes on down and you get a failed second entry long right there, but it is off what looks like to be a key entry point, but this has not been confirmed off this side yet. It's not back to the EMA. It's a little sideways congested. I'd skip it. You do the same thing here. And I mean, you're still working lower, but you're just not getting any setups here. And you're working along. This is another one that you might consider. Again, I would wait on a lower high most likely, and that comes right over here. And then if you go short, you're a little better off. It actually comes back first and then turns down. The only problem is that right in the middle here, you don't have much room. It did push on through, so it's probably cleaned everything out and gives it a better chance to go lower. However, if I entered this, I would let it break lower and drop a limit order a little higher in here and hope it comes back and gets me before I enter. The better trade is to wait till here. It looks just like this. It's almost a perfect repeat pattern. It breaks lower, pulls back, and now we got a lot more information. This is a strong downtrend. Repeat pattern, go short right there. I mean, it's the exact same thing as this. You can see we're coming sideways, comes down, pulls back, except here you even get a failed second entry long. And I guarantee you there's a bunch of people that bought right there. In fact, I think the trader I told the story about with the put, I think he either went long here or here, one of those two. I think it was right here. And that might have been one of his winners because it might have got enough to get out, but don't be buying a strong downtrend like this. And this is at the midline, and notice you're going short right at the midline. And that's another great move down. Comes back, makes a new high. First entry, second entry that fails. It breaks higher first and turns down. I don't think I'd wait for this to close, especially if I did, I wouldn't enter because of that. But you might enter this one on an engulfing bar, and then you would have kind of had to ride this out, and it would have scared you to the bejeebies out of you, but you never would have got stopped out if you put your stop in the right place, and then it drops on down. Comes back again here. It's just a first entry, though. I'd probably skip that one. That's really tempting, but we did just come off the low side. So you got to be real careful. And then we actually get an overshoot. There's 2 legs back here, but no setup for a short. We drop down again. We way overshoot. Now you got to be asking yourself, is this an overshoot or is maybe this a midline? It's too early to tell, but I'd be asking myself that right there. So we come back here and we get a first entry. The reason I put this arrow here is a trader sent me this and he took this trade. There is a second entry short right there, but this does not break higher for one. And you got this big bar, then you got an inside bar, and you got an inside bar. Inside bars are notoriously unreliable. There's no rule that says you can't take them. But if you do, you're going to have some losers. First of all, the context here tells you, hey, we just had a double overshoot. Plus, you had a break of this shorter term. Hopefully you can see. Let me just color this one different, just so it's a little easier to see. So you got this yellow channel that's a micro channel within the bigger one. And this is where it overshoots. But you just had a break of that and a new low. So this thing could reverse. Plus you've had an overshoot twice of the main channel. So this is no place to be going short based on the context. Plus you got 3 bars inside. This one doesn't even break higher. And so that's congestion. 3 bars in a row, at least one of them has no body or a small body. So that's a red flag right there. The overshoot's a red flag. The break of the yellow channel and a new low is a red flag. The fact that you're already bouncing off back inside the channel is a red flag. This is where a market's fixing to go higher, not lower. And if it does go lower, there's no setup there anyway. And guess what? This trader got burned, and then they send me their chart, and they can't figure out why that second entry failed. We're not pattern traders. We don't trade just because they're second entries. The second entries, all they do is set up the timing in your entry point. The context is what we trade off of, what the chart tells us. The chart's not saying short here. It's saying, look at that big leg up, and then you get a little two-legged correction, and guess what that is? That's the center of a pattern at a minimum. So what does the pattern mean? It means there's another leg going higher. Probably put it right there. And that takes you back to the upper side. But because we had an overshoot, that leads to a reversal. Now, you don't want to be trying to go long here yet. This is still a very dangerous market for going long, but there's no reason to go short either. Not till you get up here and this runs out of steam and resets. And you can clearly see there's a two-tiered channel working higher here. And guess what? We get another overshoot of this one. We shoot down. There's even a short. Somebody will probably ask me this. Yeah, there's a short-term channel in there too. But there's a bigger two-tiered one. And you get a first entry. You move on down. You get a second entry. Not a second entry long here. Because you're not going to go long in a strong downtrend. Because we're going to retest these lows. Sometimes when you get a reversal, it'll turn over and go. But there's no reason to go long here. That's an inside bar again. Guess what? If you went long there, you got burned. Just wait, and if you're patient, you see the trout, go short right there, and boom, quick, easy move. And of course, you're looking for two legs down. I'd measure this one like this first, but I'd also measure like so. I measure it both ways. It's really more like that. That's probably the better measurement, but and it starts going sideways. So this is way too tight, and then you fail out and you make a lower high. The problem is you don't have much room back to the lows. Then another trader took this trade. It failed on them. They're set up a little different than this. They actually had a big bar up, and right here there was like a big bearish looking bar. And they went short, and it broke higher on them. You notice if you'd taken it on my trade, on my chart, you still would have survived. Notice the new low, first entry, second entry. You went short there. It never came back above, so you would have survived. But you can't enter with no more room back to the lows than that. This is just congestion. So I left that arrow on there so I wouldn't forget to talk about it. I could see why that's tempting. This strong market down, but we've already had a break. And a move, the key is we don't have a move to a new low yet. And this is all one move right here. So you would be looking for at least a second leg down, which is down to here where it corrected, but it continues to go lower. All it was the selling was so strong that it just took a little while for the momentum to slow down. And once people realize, hey, this move is over, then we're rocketing back up and we end up with an up day. So that's what happened here. Once we met all the targets that I pointed out earlier. So you don't want to go short there, and I wouldn't go short here either. You do come down here, and you could look at this as a failed second entry long. That's basically a double top. So first entry, second entry. So, but there's not much room there. I would be willing to say this, because you've already got a break now and two legs down. So it's really dangerous going short here. And that's not a very good signal bar either. But it doesn't matter since it's a failure. And it probably will trap some longs because there's always people trying to pick the bottoms. So under that circumstance, I'll give that a green one and say, hey, I'd let it break lower and maybe drop a limit order a few more ticks back to give you a little more room and see if you could get filled. And if so, then you take it. But I don't think I would enter with a sell stop, even though we're probably going lower, because I guarantee you every time we slowed down here, there was somebody trying to pick a top, or I'm sorry, trying to pick a bottom. And they just get burned over and over and over. And this is where the last few of them capitulate. They give up and say, I was wrong, we're going lower. And they might even start selling right in here. And that's why this runs down, because they're all exiting. They've finally given up. They tried to buy every one of these moves, and finally this is where they give up, and it kind of capitulates. And they all start selling, saying, I'm wrong. It's not going higher. And guess what? Just about the time they all exit and run and they're done, and that little capitulation's over, what happens? It reverses and goes, and it was the bottom. But you can't pick them, so don't try. Wait till you got a confirmed trend in the other direction or a reversal pattern, and then try to go long. And you don't get that till right here. So there's no reason to go long in here. In fact, I still like going short here because this is working up. You get a break, you move up, and guess what? That's a second entry short right there. Technically it's not, because there's a little jog right there, but that looks like a leg up, correction, a leg up. And more than anything, you had a new high here, first entry, second entry, so it's a failed second entry long. It's a trap, and look how bearish that bar is, just because of how bearish, and it actually broke higher and turned down. I don't know if I'd go short right there. You still could, but I think you're better off to go short one tick below there, because that gives you plenty of room back to the EMA, just in case it bounces like right there and goes higher. But when it does try to go higher there and fails and turns down, now you got a second entry short and a chance to go short right there. Technically it's not, again, it's not a second entry short, but you can clearly see the two legs up, and this is just a low, you can just call this a lower high, and you can see there's two attempts to go higher too. So a lot of different ways to look at that one, but I like that one. And you can see again, the longs, the early longs all got fooled right here. There's probably some more of them that are going to give it down to here, just to praying that they get lucky, and maybe they hung on and got lucky. But notice, again, you make a new low right there, and you try to go short once, and right here back at the key entry point, you try to go short twice. Now, I'm sure some more people probably got fooled right there. No reason to go short right there. Again, you got 1, 2, 3 bars stacked up. This one has a very small body. You've already had a break and 2 legs down, another overshoot of the channel. There's everything is screaming here, trap, and it breaks lower, especially when you see it go 1 tick lower and instantly reverse and go up and go right out the other side. You know they got them trapped. Go long right there, and that's probably the trade of the day, because you get a runner here, and you can ride this all the way back to the top, because there's no real steep corrections. I mean, there's nothing to scare you out of this till maybe right here, because these are very shallow corrections. This is an easy one to hold on to a runner, because you've got all this locked in. So if you can ride out that one correction right there, you can probably ride this all the way up. So that was the last really good trade. You do get another second entry long right here. And another trader asked me about this one, because you do have a spike and channel up, and that's the first break. So even if the big channel is not here, you probably don't have it yet, you still expect prices to make a new high here. And I marked this one green. It is at the EMA. You're expecting prices to make a retest of that high. The signal bar is just iffy. If this was a little better signal bar, I'd probably say take that trade. It is a little congested, but you can clearly see it's 2 legs down and we're trending backwards. So he took this trade, rode it up to here, and he didn't scalp out. He was trying to catch the runner up to here, which he would have got it exactly right. I mean, he had it figured out to the perfectly. He read it right, he played it right, but they came back and got his he tightened his stop right here, and they can't. If he'd have just left his break-even stop, they wouldn't have got him. But he moved it up to lock in some profit, which was smart if you're not going to scalp out. I think he did the right thing, because I wouldn't let that come back and turn into a loser either when you had a couple of points already in your pocket. I think he was trading like 4 contracts, so he had 8 points in his pocket. So surely don't let that come back and stop you out. But this thing takes on off. Comes back to the trend line here, but you just can't go long right there. It's not a good enough signal bar. There's not much room back to those highs, even though we're probably going higher. Just wait, and you see it comes back, and there's actually notice the new swing low right there. It's basically a double bottom. So first entry, second entry. So as soon as it breaks higher, it's a failed second entry short. So when it broke above that bar, I like going long right there. That's technically it broke lower and then turned up. So this is your signal bar. It's an engulfing bar. So put your sell stop or your safety stop one tick below this bar until this closes and then move it over. And notice how it just kept going. And then it breaks lower again. Now you got a failed second entry short. I marked this blue just because it's at the key entry point and we're probably going higher. This is a strong trend, even though it's because there's no real strong corrections, but you got to go long right into that resistance. So it's something to be concerned about. So maybe you let it break higher and drop your limit order back a little bit. But honestly, I like just going long right there. If you understand what's going on, this doesn't look like it at times here, especially up here, but this is a very strong trend. And I would measure, of course, here's your first move up. And then this is your little two-legged correction right in here. So you're looking for a measured move way up here. And this trend, and you can see that we went right to that, corrected. That's where people were taking their profits, but this market's not done, and off it goes again. So I just don't think you want to enter way up here, and then by the time this one works back, I didn't put my little, get your break, couple legs down, but you don't get a signal bar. So it's 2 o'clock. So I just think it's a little risky entering right there. You've already had your 2 measured legs up, but you probably want to measure this from down here too. But you can see we still went way on past that. And up here it's just starting to get a little iffy because you're just so far. When you get to be that far away from the EMA, it's just a matter of time till it comes back. And by the time it gets back, it's 2 o'clock. So 32-minute lesson, but there were some good learning opportunities here. Good trading day. Just follow the rules. Follow the price action. Don't try to guess what it's doing. And the most important thing is you got to read it right. Just because you see a second entry, be real careful because second entries are powerful. And you can trade them completely wrong and probably make money. You won't have a very good win percentage. You'll have a lot more losers. And if you're careful and if your losers are not too big, you could probably trade all second entries and still make money because they're that powerful. However, you're going to get a lot of them wrong, and you're probably going to get some big losers, so you're probably not going to make any money, even though you're probably going to have a pretty good win percentage just trading second entries. So don't understand that you can't just trade second entries. You got to understand the context of the chart, and you take the second entry. The second entry is only a pattern that sets up our entry based on our read of the chart. So don't think you can just trade second entries and have success, because you probably won't. You got to understand the context of the chart, and so you find the place you expect the setup to happen, and then you look for the second entry or the failure or the trap or whatever. But it's always going to be at these key entry points. Keep that in mind. And if you come back and study this chart, you'll see every one of them was at a key entry point. It was either the main trend line, a micro trend line. Then on this way down, it'd be off the resistance of these little channels, and on the way up, it'll be off the support of these little channels, or off the key entry point, the main trend line. And then you also have the EMA and the midline, which are minor key entry points. They're less important, but if you start to see prices consistently turning down off a midline and you get a setup, take it. But make sure you've seen proof that it's acting as a key entry point and not as a minor key entry point. So 34 minutes. I got to close. I got to stop this one. This video is going to take forever. Hope you had a good week. Hope you had a good trading day today as well. Hope you learned something today. This was a good learning opportunity. I'm going to wrap it up. We'll be back again to do it Monday. Have a great weekend. This is Mac with PriceActionTradingSystem.com, and we'll see you next.